Hi, it's Leah at Blackfish Finance, and we've got Theo here from BMT again, explaining how a depreciation report does get done. So Theo is a quantity surveyor at BMT. He's an expert that we trust with our investors, and he's going to explain what's actually involved in a depreciation report. So thanks for coming again.
No, thank you, Leah. And yes, what we do is we physically go out to that particular property and we assess every asset. We pick up things like lights, blinds, carpets, work out the square metre rate to that entire investment property, go back to the Oz where we can actually produce a 40-year depreciation report. It's the same report you'll take to your account for a number of years, or up to 40 years.
So does that mean any property that has been built from 40 years ago till today, or where does it sit in the age bracket of houses?
Yeah, good question. So it's from when it was built. So say you bought a property that's 10 years old, you're entitled to 30 years of construction costs. So we will start the report from that particular date, or your purchase price date, your actual settlement date, and we will project 40 years, but the last 10 years there'll be no deductions available, unless there's been additions or renovations that we're going to be able to pick up that last a bit longer. So
excellent. And if a client hasn't had a depreciation report done before, can they backlog that in their tax return?
Yes, they can, definitely. So you can amend up to 2 years worth of missed deductions, and the report starts when their settlement date or completion date. As I said, we project 40 years.
And if a client buys an investment property that's already had a report done, should they use that report or should they get a new one done?
Good question again. So brand new report needs to be done again. So if there's already an existing report in place, let us know, because we'll go out to site and there might be, say, an additional little concrete pad where the garden shed is. We'll put a value on that. There might be new fencing and extension. They've gone up a level. There's all these different things that come into play. We'll physically see that out on site and make sure that client is claiming every deduction on that place.
Excellent. So then what happens, you get this report from BMT, you give it to your accountant, and your accountant can then claim that ongoing while you've got that property. Tell me, how many people in Australia are using investment reports? Who's not using the depreciation reports? What statistics do you guys see in the office?
The statistics are 80% of investors in the marketplace are actually not maximising their deductions. There are a number of clients out there that don't realise that they're entitled to these types of deductions. Like I may have mentioned recently, we go out to site, we meet a tenant on site that says, oh, I've got a place. And you know, there's a lady that I met recently, she had a place in Greenwith. It's a 10-year-old place. Guess what? One of her places, she can claim these deductions. So yeah, 80% aren't maximising the deduction. It's a pretty full-on number.
Yeah, and tell me about the BMT guarantee in regards to the price.
Yes.
And what you do guarantee back to our clients.
Lovely. So our fee is 100% tax deductible, and we've got it in place where if we cannot double what we quote in the first financial year, there is no charge to our services. So yeah, speak to BMT and we'll make sure that we quote as that property sees fit.
Excellent, thank you. So thanks for coming in today.
My pleasure.
It's great information for our clients. If you've got any questions, we'll put the contact details of Theo underneath. We do recommend all of our investment clients do get a depreciation report to maximise their tax deductions. If you've got any questions, let us know. Have a good day.
Thank you.